Hi, I'm Robyn Rowen, your Minnesota Big I Lobbyist, and today we are continuing our conversation with industry leaders about the hard market. Today's victim/guest is President and CEO of the Insurance Federation of Minnesota, the fabulous Aaron Cocking. Welcome, Aaron, and thank you for joining us today.
Thanks, Robyn. I'm happy to be here, and maybe not so happy to talk about the subject issue, but it's going to be good nonetheless. As Robyn said, I'm Aaron Cocking. I'm the president of the what am I the president of? The Insurance Federation of Minnesota. We represent the state's property casualty insurance carriers, and we hail ourselves as the voice of insurance since 1914. So we've been around for a while representing carriers, and happy to talk from a carrier perspective today about the issues that are facing the industry.
Well, Aaron, you look remarkably good for being here since 1914. Although this
good
crisis,
skincare product. Yeah.
This crisis might age you a bit. So why don't we jump into the questions? We used to think that this kind of availability and affordability crisis that we are currently experiencing was reserved for the coasts. But it seems like every day Minnesota agents are hearing from another carrier that is restricting their offerings in Minnesota, making it harder for agents to find coverage for their clients. As the voice of the property and casualty industry in Minnesota, we are looking for your perspective on what's driving carriers' decisions to restrict coverage in Minnesota.
Yeah, so let me talk from a from a broad perspective, and not necessarily from any specific carrier perspective, because I think all carriers are making individual decisions that's best for what is best for them in their specific book, and everybody's got varied book of business on what they write and what they want to write. But I think on a broad level, one of the biggest things that I think is driving these decisions is carriers' inability to get the rate that they really need. It's been a challenge in this market with inflation and claims costs going the direction that they are for carriers to get the adequate rate that they need. And part of that is a prohibition that we have in Minnesota statute that our department has kind of taken advantage of more so in the last 16 months than ever before, which says that carriers can't take more than 25% rate over their previous rate in any 12-month span. And what that's doing is it's artificially suppressing rate. And so when you can't get what your indicated rate is, you've got to find other directions to go. And one of those is beefing up your underwriting criteria, restricting coverages, all to find a way to be able to make sure that you can, continue to exist. If you can't bring the premiums up, you got to try to find another way to bring the claims costs down. And I think that's what we're seeing on that. I think we're also seeing pressure from reinsurers as far as what they're dictating down to the primary insurers because of the exposure that they've seen not only nationally but also globally. They're looking back on 5-10 year loss history in Minnesota, and they're saying, listen, we've got to do something to change what we've seen the last number of years. And so telling these insurance companies, you've got to do something on roofs, you've got to do something to deal with wind hail issues specifically. And I think the other part that's partially driving this is you've got some carriers that have decided that they're withdrawing from the market, and so what that does is it puts more people looking for insurance to other carriers, and a lot of carriers I think are looking at that saying, we want to be judicious about what risks we want to take on, and one of the ways to do that is to really beef up what some of your underwriting criteria is to be able to make sure that you can continue to provide coverage to your existing policyholders.
That's a lot of great information. let's unpack it just a little bit, because I think in terms of where the department is, that might be, obviously we can't control the weather, but we might be able to fix some of the issues that we're having with the Department of Commerce. So let's start with the rate approval process. We interviewed the department earlier this year, and they felt like their approval times were right within their target goals and that there wasn't really an issue in terms of timing. we've heard from carriers that may not be the case. So can you share just a little bit about that, what you're hearing from your carriers in terms of timing?
Yeah, I don't think that you will find a carrier that will tell you that they have quick turnaround from the department in any way, shape, or form. I'd be curious what metric the department's using to suggest that they are getting rapid approval. I would say one of the biggest things that I hear constantly from the member companies that I represent is the speed with which Minnesota does things. They use the example, and I've used this frequently. You know, if you had a carrier that applied today in Minnesota and today in South Dakota would likely have an approval to you. What's today? Thursday, by the end of next week. Minnesota, there's carriers that are waiting years to get responses and approvals on things that they have filed, and that really has an impact on companies' ability to do business, and more, I think, is ability to bring new innovative products to the market, which are really beneficial to consumers and policyholders in this state. And I think that's one of the things that the department doesn't necessarily fully grasp is the negative impact they have on consumers as a result of taking the time that they do to get things back to companies.
And I think, I think our society often takes a crisis sometimes to get results, is what I'm trying to say. And I feel like, maybe some good can come out of some bad, and maybe we can, shed some light on this issue with legislators, because now you can see the results of it taking a year, and what happens when carriers can't get the rate increases that they need.
Yeah, I think that talked to a number of legislators, and everybody always wants to know, why are my insurance premiums going up? And we look just back on, insurance being a regulated industry. And so what the Department of Commerce does and what the legislature does and the changes that they make and the changes that they put forward all have direct consequences on carriers, what they write, how they write, what their risk appetite is. And so I think, where we're at in the market now, with it being so challenging and kind of rising to the point that everybody recognizes on some level the issue of what the difficulties we're having with insurance in Minnesota is, gives us a really good time to go back and evaluate some of the things and bring it to the legislature. For legislators that say, hey, what can we do to deal with this? We want to be able to say, well, you could look at this, you could look at this, but especially doing things right now that put additional burdens on insurers is only going to drive those premiums higher.
And that's a good transition to talk a little more about the rate hearing issue. So the law gives the department the ability to say, if you're raising your rates more than 25% in a 12-month period, we can take you to a hearing for an excessive rate. And I think you mentioned that is really having the effect of artificially suppressing rates. But there is the option to have a rate hearing. And, do you know how carriers are responding to that request, or if there's been, have they had these rate hearings? I can't think of a rate hearing in my, 10 million years of experience in Minnesota. I can't think of one rate hearing that's actually gone to a hearing, a rate issue that's gone to a hearing, but I'd like to hear the perspective of the carriers on that.
So as insurance nerds and more like legislative nerds, I guess, we know that there's a big difference when we write in Minnesota law, may or shall, right? Mm-hmm. It makes a big difference. And so the law that we're talking about on the 25% rate increase says the commissioner may. It's not required. As the commissioner, she does not have to take them to a rate hearing, but she's chosen to do so. And the problem that we're running into as a result of that, you've had carriers that have said, yeah, we're happy to go to a rate hearing. We're happy to show that our indicated rate need is way higher than 25%. The problem was, as we dug into these rate hearings and we reached out, to the department, not to get too deep into kind of the nerdy legislative statute, but the statute that controls the 25% says these hearings are subject to Chapter 14. Chapter 14 says that any evidence entered into or considered as part of the determination must be part of the public record. Carriers are unwilling or are very hesitant to go and to enter into the public record proprietary information that gets them the rate that they need. They don't want to be able to share that with their competitors or have to share that with their competitors, and that has put a significant damper on carriers' willingness to go to these rate hearings. So what most of them have done is drop down to the 24.9% rate, and we'll take that. And what that does is, as I talked about at the beginning, is it really suppresses the rate. So instead of getting that rate you need now, we're going to be lagging and trying to catch up in the next couple of years to be able to get to the point of what they actually need to deal with. Furthermore, I would say we both know what the rating laws in Minnesota says, that they can't be excessive, they can't be inadequate, they can't be unfairly discriminatory. And when you look at the definition of inadequate, I mean, I think you can make an argument that some of these rates, I mean, you look at the loss ratio in 2022 for homeowners insurance statewide, 158. The combined ratio was 192. That means that for every dollar of premium collected, companies on the homeowner side were paying out $1.92. I don't know how you get to the point where you can say that the current rates are not bordering on inadequate.
Well, and the flip side of that is excessive tends to be defined as in a lack of competition or excessive profit. And I don't think you can look at the loss ratios and say that's the case either. But it sounds like that might be something we can work on in terms of ensuring that the confidentiality. I know you can petition an ALJ in a hearing to close the record and protect the data, but you have to prevail.
Correct.
So I think that sounds like one thing we can do at least, and try and at least remedy that situation. But obviously the bigger issue is that the rate increases, the filed rate increases kind of speak for themselves, and the need is somewhat obvious. And this process, the artificially suppressing rates, is not helping the market at all. Because if you're not going to get the rate you like, you're not going to write the business, and that's a problem we're seeing. You mentioned reinsurance cost earlier. And one of the things we've heard talked about, certainly Big I National has suggested this, is some kind of narrowly tailored federal backstop might help carriers take on more risk. And in Minnesota, we've seen actually quite a bit of success, at least on the health insurance side, with a reinsurance program in leveling premium increases on the health side. So what are your thoughts about some kind of government-funded reinsurance program at the state or the federal level?
No. I will say it as bluntly as that.
Could you be clearer?
And let me expound on why. First of all, when was the last time you thought, man, we have a major problem? You know who would be great at fixing that? The federal government. And I think
hard to argue
some
with
of that. So we obviously have seen in Minnesota tremendous success for the health reinsurance program. I asked somebody, I said, how do you, what do you think of this, in comparison to the health reinsurance? And they said, it's like comparing apples to elephants. It is so far different. Number one, I mean, I make the argument sometimes that, I mean, health insurance is not even really insurance anymore. I mean, it's more like an agreed upon, like, fee schedules and stuff. I mean, you don't underwrite for it and you don't rate for it. I
call it haircut insurance because it's not if, it's when.
Yeah.
You need it.
100%. And so you look at the structure of how the health reinsurance is set up, and you also look at it in terms of like the difference between health insurance and property casualty. I mean, the P&C side, you've got hurricanes, not in Minnesota, but you've got tornadoes, we've got wind, hail. I mean, you've got things that you've got to kind of contemplate that can come in. Some areas are more heavily targeted than others. Health insurance doesn't have that kind of, you don't have like a cancer season, like where something's going to come through, or I don't mean to be flip on that. I just mean like you don't have something that's always going to come through that, it's kind of spread out. And as I understand the health reinsurance program, I mean, it's kind of bridging the gap that the health insurers are on the hook up to a certain point. The state steps in at a certain point until you hit a certain level, and then the insurer picks it back up again. I just think it's really challenging to set up a program that is going to work because of the apples to elephants comparison between P&C coverage and health insurance. And furthermore, I think that the private sector on these reinsurers are always going to have people that are more sophisticated on figuring out and how to better address this problem than you're going to get from government. The other thing that I would add, and then we can be done or move on, when you take the risk into a pool and you kind of arbitrarily buy it down from the state, it really interferes with this whole law of large numbers, the risk transfer where you're putting people into a pool, because you're kind of pulling some of that risk out. And one of the things that you get, insurance naturally kind of figures out what risks are and how to price for them in a true insurance sense, right? Where you're underwriting and rating for it. Now, we already have established that health insurance doesn't do that, which is why you can have a program like this work for health insurance. We just fundamentally believe it doesn't work for property casualty.
So it sounds like reinsurance is not a good solution for this problem, but do you have any other ideas that might encourage carriers to take on more risk?
Well, let me say, I wouldn't say that reinsurance isn't the answer. I would say government-sponsored reinsurance is not the answer. You know, we're always looking for what we can do to make it easier for carriers to write, to take the burdens that they're facing out of it. One of the things that we hear is carriers that have moved to percentage-based deductible, right? But one of the things that go along with the percentage-based deductible as they currently exist is it's a percentage of the coverage a dwelling. Well, that works maybe when you've got a total loss, but think about that in terms of
Does that mean the cover of the value?
Yeah, so if you've got a $500,000 house and you've got a 10%, although that might be high, but if you've got a 5% deductible, it's $25,000 deductible based on the value of the dwelling. One of the things that I've had suggested from one of our member companies was we should look at doing a percentage of the value of the loss. One of the things that we keep hearing is we need to have policyholders have more stake in the game at claims time as far as what they're responsible for. Oftentimes you have, you know, a roof claim come through, and so they need new shingles and they're out their $1,000 deductible or whatever it is, and it's like, put whatever on, I have no responsibility for it. If we move to a percentage-based deductible, a 10% deductible based on the value of the loss, suddenly when it's time to pick the shingles and it's time to pick a contractor, you're like, well, I'm on the hook for 10% of whatever that is. That's money to me. I want to be more of an astute buyer than I am right now, where it's like, here, insurance company, here's my $1,000, and now I want, you know, the best of the best, and I have no care about price. Until we can get people to have some vested interest in making sure that they are involved in trying to bring the cost of some of these claims down, that's something that we're hopeful might be able to achieve that.
One of the issues that we also hear talked about a lot at the national level is the issue of lawsuit abuse and the cost that adds to property and casualty insurance policies. And we've heard that Florida's crisis has been exacerbated by a hyperactive plaintiffs bar, and the resulting lawsuit abuse is costing Florida households over $5,000 a year in extra costs. So is lawsuit abuse a significant problem in Minnesota, and are there things we can do to address that?
Yes, I wake up every morning and think, man, am I glad I don't have to represent Florida insurers, because the Florida insurance market has been a challenge, to say the least, and they've made some steps on that. So our market doesn't look quite as bad as Florida did with their one-way attorney's fees and some of those other things. But yes, we do believe that there are changes that we could make around lawsuit reform that would make significant improvements to the industry. I think, for example, the one that comes straight to the top of my mind is the seatbelt gag rule. I mean, that says you can't introduce into evidence whether someone was wearing a seatbelt or not. I mean, think about the difference in a car accident if you have a seatbelt on versus if you don't. Why should an insurer have to pay out these exorbitant damages if you're responsible for not putting your seatbelt on? That seems incredibly unfair. We've always kind of had an issue with the prejudgment interest rate, 10%. That's becoming a little less significant now that interest rates kind of more broadly are moving up, which actually seems like now is the time to make that reform. I mean, now that you've got a little bit more parity, you could do something like that. The other thing that we're hoping to get some traction on and move this next legislative session is the issue of third-party lawsuit funding. What you have is you have these corporations coming in, looking for lawsuits, funding them, and what they're looking for is that jackpot. So you're getting to the point where they have no incentive to settle. They're not in this to kind of be made whole. They want to be able to hit the home run, hit the jackpot. And interesting, a lot of this is foreign money coming in from sovereign wealth funds, money coming in from, foreign governments that are hostile to the U.S. I mean, there's a lot of larger ramifications on this, and it's been problematic. And this isn't just an insurance industry issue. This is something that's causing trouble for businesses across the state. So something we'd like to see dealt with. The issue of nuclear verdicts and social inflation are big issues too that we'd love to see dealt with. A little bit more of a question on how you can do that. But these nuclear verdicts where these juries just seem to have no concept of what a dollar is or where the money comes from. It's just like, we're going to award you $100 million. It's like, based on what? I mean, because we hate insurance companies. I mean, that seems to be what a lot of this is, and that's really unfair because, as I tell people, I mean that the insurance companies aren't growing money on money trees. In the back of this, we all pay for this in the form of higher premiums.
Do you think, given our current political environment, that some of those reforms might be viable?
Yeah, I actually think the issue of the third-party lawsuit funding is something that we might be able to get done. Surprisingly enough, our friends in the plaintiffs' bar, who we are generally more at odds with, seem to recognize that this is an issue as well, and there's some willingness on their part potentially to come to a compromise. And as Chair Stevenson said, if the plaintiffs' bar and insurance can come together, that's something that we can get done.
Or else it's a sign of the apocalypse. It's one of those two things.
We're
not sure. Yeah, we're not sure. So last session, you and I worked together along with MAFMIC to add storm chasers to the price gouging law. And we recently heard that the AG has been enforcing it and actually having success in getting contractors to change their billing practices. You and I have both talked to both Commerce Committee chairs in the House and the Senate, and they're interested in doing more in this area. Do you have any ideas of what else we can do?
Yeah, it's funny that kind of even got done last year. I mean, it was kind of flip at the end as we were looking for anything, as we were kind of getting, taken down on a couple other issues that we were able to get this taken care of. And actually, really big kudos to Attorney General Ellison for, as companies have written these letters, had actually reached out to contractors and said, justify your prices. And you get a letter from the Attorney General, I think you sit up. And I think getting more notice out to carriers that this is available and getting more of those claims submitted to the Attorney General is gonna make a big difference on these shoddy contractors. And the more that we can do, again, to bring these costs down, I mean, because insurers are paying, exorbitantly more than you would if you or I went to have a contractor do, if we're paying cash, ourselves for a new roof. We're getting a much better deal than insurance companies are, and that's really unfair to kind of the way that the market should be structured in the first place. As far as things that we can do additionally, I mean, I think we'd like to look at, some of the dealing with the public adjusters. I mean, that's something that we constantly hear about, is these public adjusters. You've got the contractors that are paying to send these cases or these claims to the appraisal through the appraisal process. And I think trying to get to the point where we restrict their ability to do that, take some of that out. I think those generally are not beneficial for insurers at times, and so the more that we can just get a negotiated settlement, I think is better off for everybody.
I've actually seen one of the letters that the Attorney General wrote, and it is scary. I mean, it's got like the big seal at the top, and it's like you have 10 days to explain why that you're not violating this law. So that's an effective tool.
I think about that because you know that, as we were going through the process, there was a private cause of action in there for insurers against these contractors as well that eventually got dropped. And, the reason that was in there initially was because of the skepticism about whether or not the Attorney General would be able to pursue these and get something done with them. And the fact that he is really incredible. And so stepping that up, I think is going to be really important.
Yeah, I completely agree. And it also goes to the point that you and I make all the time, which is that the regulator has a bigger stick than the threat of litigation.
Yeah.
I mean, and I think here we're seeing that that's actually the case.
Exactly.
So sort of in the same mitigation scheme, we hear a lot about resiliency and helping property owners be more resilient to climate risk. And while that won't, help the crisis right now, that will obviously be helpful in the future. And we know the department did their Strengthen Minnesota Homes program last year. Do you think there's anything else we can do in that space? I think with this legislature, we have a captive audience on the climate resiliency piece, and so we might have an opportunity to do more there.
Yeah, we did the Strengthen Minnesota Homes stuff last year, and that process went through, and the onus was on insurers to set up the program to give the mandatory discounts, and then the legislature pulled the funding of the grants completely out. So we have this program stood up where insurers have to have these discounts, which was originally supposed to be for these grants that went out, and now the grants aren't there, and so you've got the program but no grant money, so people aren't doing it. I think, we're going to have over a $2 billion surplus when we come back next year to deal with. One of the things that we would like to see, and, our industry just generally does not go pushing for money at the legislature. That's their own for everybody else.
Yeah.
But I think it would be important that program has been set up. They should fund those grants. I think it was originally $35 million. Fund those grants to be able to get those buildings kind of up and fortified as best as possible.
No pun intended.
Yeah.
And maybe if we're working on the Strengthen Minnesota Homes program, maybe we can even expand it in terms of, who can apply for the grant and how much money there is.
Yeah, I think the more that we can, get normal people, even without the grant, to recognize the value when you're putting, redoing your roof or whenever you're doing things to your house, that the incremental additional cost of fortifying them to the IBH standard is really minimal compared to kind of what the value what you're going to get back from them are. And the more, from the environmental side, we are throwing roofs away that have years and collectively across the state, millions of years probably left in them, and trying to find a way to get to the point where we're not throwing those roofs away and we're not having to replace them. And I think that long term is going to have benefits for all of us.
I realize it would be pure speculation on your part, but can you give any insights on when you think this crisis might end?
Yeah, speculation is exactly right. If I had to guess, 2025, I think makes some sense. And you've seen some actions by carriers in the second half of 2023, which are going to have actions kind of across the industry that bleed into 2024, which is going to be problematic. Once you kind of get a year clear of some of that stuff, hopefully things open up a little bit. We talked about the rate issue before. If you had companies that were able to get the 25% or thereabouts in 2023, if they can get another 25%, if they have to, because that's what their indicated rate is in 2024. Inflation's slowing a little bit. If we can get to the point where we don't have storms next year, which I know is way out of our control. But I mean, a good year of no storm activity, again, knowing that. And then, year into 2025 where maybe you're able to get your additional, maybe by that point you're caught up on rate. And I think once companies get to the point where they can get caught up on rate, that eases a lot of these other concerns that we're seeing. At least that's my hope.
Thank you so much for joining us today, Aaron. I feel like you provided a lot of valuable insights for our members, and we look forward to partnering with you and seeing if we can make some of these changes in the legislature in 2024. Thanks for listening, everyone.